Hello, everyone. Welcome to a special episode 1 hour later than usual for our This Week in Crypto stream. I'm your host, Brian. We may have Maxim, our founder, on at some point to talk markets with me a little bit. But as far as the majority of the show, I'll be running it on my own. I possibly will be running all of it on my own. But thank you for those of you tuning in at this later hour. I'm on a laptop, which is why you don't see my camera today, but you should hear my voice loud and clear. Of course, let us know if that is not the case at any point, and we will do some adjustments. But yeah, we're certainly going to be covering a lot today, looking at what right now looks to be a nice, encouraging rebound for the crypto market. Certainly not a major one by any means, but bumping back up around 41.2K at the time of this stream. Bitcoin appears to have some momentum going into the weekend. Other altcoins have been mixed. As we can see, looking at the various market cap returns, Bitcoin is actually up 1.3%, currently showing 41.3, not for 41.2, up to the minute. Ethereum did take a big hit, though, down 8.5%. Actually, one of our worst performing altcoins we've seen, which is rare, at least among the top 100. I know that if we go beyond that, there are a lot more that have fizzled out significantly more than Ethereum. But we can see that some of the biggest gainers include Tron, Internet Computer, BitTensor, Sui, Helium, and Chiliz. Meanwhile, some of the biggest losers, as I mentioned, Ethereum. We also have Lido staked Ethereum. Chainlink actually had a rough week, down 6.5%. Toncoin, SEI, Hex, and Ordinals. Just to name a few of the biggest winners and biggest losers. We might analyze a few of those in further detail as the call progresses here. You can also notice that despite Bitcoin's up and down performance, its social volume is beginning to decline as we get further and further away from that January 10th day of the SEC approving 11 separate spot Bitcoin ETFs. So with less discussion and less overall interest in crypto after the first 2 weeks of crypto post SEC approvals were so disappointing, we began to see less and less discussion. We saw less and less overall interest level. And of course, some of the optimism really faded quickly. I saw numerous posts, as I'm sure many of you have, all about, why is crypto fading when we got our way and the SEC approved all these ETFs? Shouldn't we be above 50K by now? What's happening? So there was this initial wave of panic, and you can watch the replays of some of our videos from 2 to 4 weeks ago. We were talking about the possibility of a buy the rumor, sell the news effect, where essentially it's exactly like it sounds. You have tons of people buying up Bitcoin and any crypto asset out there, pumping market caps right and left with the anticipation of these approvals, and then exactly as expected, we get those approvals, and then markets tank, which confuses everybody. But we've seen it a couple times going back to the Ethereum merge in September of 2022, the Litecoin halving back in, I believe, June of 2023. There are several instances where everything goes exactly as anticipated, but the impact after it happens is one of negative price returns instead of, this big pump that everyone anticipates. And the reason is people pump markets with the expectation of something happening, and the price inevitably gets what's known as baked in, where the impact of what is going to be accepted already gets blended into what the value of the asset is, so that when the actual event comes true, there's nothing left to do for the price other than go down, because it's kind of mission accomplished at that point. And the long-term impact isn't something a lot of people want to wait around for. So obviously, to give you an example, the Ethereum merge that happened in September 2022, I remember it well because Santiment was covering it heavily. Price was these are ballpark estimations from what I remember, but the price was at 1100 or so about a month before the Ethereum merge, and then it finally started to pump up about 2 to 3 weeks before. It got up around 15. Then the merge happened. Everyone was watching it closely. Went flawlessly, no issues at all. And then the markets fell back down. And everyone said, what the heck? Why are we back down here at 12 to 1250? This doesn't make any sense. I thought Ethereum would be an even better network and cause people to flock to it. Well, the reality was they already did. They did so beforehand, and that's what caused the price pump, because it was such an inevitability that the prices would pump. So once that happened, we saw the impact of everyone kind of basically a bunch of small traders, novices jumping in, thinking that this was the event that was going to, make Ethereum go to 2,000 and beyond. And instead, we saw a retrace from the smart investors who noticed all of the tiny buy orders coming in and basically capitalized on that and punished all of the FOMOers who waited until after the event instead of getting in before it was already likely going to be a successful merge. So that's just a little side story, and it's kind of a good comparison to, I think, what we're seeing now. Now, looking over a year, almost a year and a half past that merge, obviously, the merge probably did have a positive impact on Ethereum because it got up to 2,500 just about 2 to 3 weeks ago, as the Bitcoin approvals were at their hottest point in terms of social volume. So it's really about patience, if anything. And who knows whether it's too early or just right in terms of us starting to see the actual market value impact of these Bitcoin approvals. I do recall that prices were up around 46K and we're still at 41 right now. So we're still down, a good 7 or 8% since the good news of the approvals happening. But if we look at a year from now, the argument is still there. We have significantly more exposure for traders to get into Bitcoin, people who were not in exchanges before and wanted to have exposure through their equity portfolios. They finally have the opportunity to do so. That theoretically and objectively should be a good thing for the overall amount of people to have the option to put money into crypto, which is good. So with that said, the question is, are we finally past the point where we went through the phase of euphoria right before the approvals, confusion after prices went down after the approvals, and now we're kind of in the state that crypto usually benefits from, which is nobody knows what to do. Everyone has paralysis and they're waiting for something. It's almost like there's analysis by paralysis where nobody wants to make any big moves either direction. And we saw, as the thumbnail said, we saw a bit of shorting and a bit of FUD and light signals that there was some serious doubt going on. And that's usually the recipe to see a rebound, because markets generally go the opposite direction of the crowd's expectation. And I think where we're at now, these final 5 to 6 days of January are going to be crucial in seeing whether the crowd now starts to get euphoric once again, seeing that Bitcoin is just slightly starting to climb back up, or are they still going to doubt this and think that, the impact of the ETFs were null and there really wasn't ever much to celebrate and they're staying out until prices get down to 30K. If it's the latter, that's great news if you're bullish right now, because then we could really shoot straight up to 50K. Beyond that, potentially even start climbing toward all-time high levels that we saw back in November 2021, because nobody believes it's going to happen. So that's my rant about just the overall psychological uh, ups and downs of the crowd and how they could potentially impact markets in a few different ways. That being said, I want to look at some of the trending topics now as we switch subjects. And we'll look at some of the hourly trends here. I wanted to point out the number one topic that's trending at the moment, which is Silk. Obviously, many of you know about Silk Road from over a decade ago. There has been a notice from the U.S. government where they're filing to sell $130 million worth of Bitcoin. That's a big deal. It certainly is going to shake up the markets with that news, and I think more than anything, it's a positive for crypto because it's money that was essentially sitting on the sidelines that is now going to be entering into circulation once again for traders to do what they want with those coins. So you can see a lot of keywords related to Silk Road and seized government here. And then we have a few 130M, of course. So yeah, the top four subjects and the number 7 are all related to that topic. We have loans because there's discussion about using credit card loans to invest in Bitcoin and paying off the debt later with the gains from Bitcoin. I believe I actually read a post yesterday. I believe it was on Reddit. I think it was related to a post that went semi-viral about someone who bought about a year and a half ago and took out a huge loan and just sold most of it. I think I have that story mostly correct. You feel free to correct me in the chat if you've read that thread too. But he started a big topic about people kind of having the guts to take out a loan just to invest in crypto, which I would not. I'm not going to advise either way, but obviously Bitcoin and crypto in general is a risky game at times, and I believe that there's just a lot of polarized opinions on whether that should be something that could be normalized by people. Because if you take out a loan in a volatile sector like crypto and prices tank, you've really messed up your life. But he, of course, started the conversation by sharing his success story. Now, of course, I think he's also an anonymous person, so you never know if these stories are even true. So keep that all in mind. Tesla is trending after an earning report. The stock is down, and target prices have been cut. ARK Invest bought shares in Tesla, which is interesting. Down 12.1% on weak auto revenue. Okay, so it's mostly just related to what is considered to be one of the most popular tech stocks, especially for crypto traders, due to Tesla's higher volatility than most equities out there. Okay, shifting again, I want to look at, actually, before we look at Bitcoin's metrics, take a look at the MVRV divergence, which is actually showing that there's still quite a bit of undervaluation related to altcoins. And this trend started about a week ago when they really started to tank hard following the initial days after the ETF approvals. You do see a few that are still overvalued: Chili's, Dusk, Merit, Superfarm. I won't name them all, but the vast majority, call it 75 to 80% of them, are in underbought territory now. And at least on my last check, altcoins are having some pretty considerable recoveries today. So I would keep in mind the fact that at least for the midterm, which is what this particular MVRV model is measuring, it's showing that there are some opportunities out there based on average trading returns being relatively in the dumps still for several alts out there. Of course, it's all going to be based on whether Bitcoin continues to stay stable. If it falls back below 40K, we may see a market-wide panic sell-off once again that can make things even more underbought here. So there can be arguments that we need to kind of wait and see in terms of altcoins right now. But I like the sign of a lot of green finally showing up on this MVRV model after, if you review our videos from a month ago, as we were leading up to the ETF approvals, it was just overbought everywhere. So it was kind of an inevitability. We didn't know if it would be right after the ETF approvals, but we knew that there would be a point in which altcoins would start to correct and shed some of their inflated market caps that they were uh, enjoying from October all the way up until early January. Another thing I want to mention, our activity matrix. It's mostly showing cold to neutral signals right now for most activities when measuring their amount of active addresses, network growth, whale transactions, things like that, measuring it on a 3-month basis and seeing where it currently is now. However, as always, there's going to still be plenty of anomalies. We can see that assets like Curve and Numeraire and even Bitcoin, which we'll get to in a moment, are having very high levels of unique addresses interacting on their respective networks. Network growth is somewhat similar to active addresses. That's where we look at the amount of new addresses popping up on a daily basis. So Numeraire, again, is one to keep an eye on if you're interested. And I'll come back to this in a minute, but Numeraire, just to take a look at this, its average rank among these 8 different metrics is 3.4, which is incredible. If we look at the detailed grid here, Numeraire is red hot with all 5 of its existing metrics that we have on the past current day, showing that it's one of the largest days of network activity, if not the most active day of network activity in the past 3 months, with active addresses, network growth, whale transactions, social dominance, and age consumed all having phenomenally high days. It doesn't necessarily mean that Numeraire is the guaranteed coin to pump, but I would keep a very close eye on it. Really quickly, I'll just show you what I'm talking about here. So the price hasn't particularly pumped in a super eventful way compared to the rest of the markets, but you can see, just go to the last month, January 25th, easily the highest day of on-chain transaction volume. Huge daily active addresses. Its MVRV is kind of neutral, it appears. In fact, on the 30-day, it's the average trading returns are still down 6.5%, which indicates that there could be an argument for some further growth there. And these whale transaction spikes and the daily active address spikes and network growth spikes, they're all supporting the argument that that could very well happen. So, of course, not investment advice, but I do recommend keeping an eye on Numeraire, which is suggesting that at the very least it's going to be having a lot of volatility that you can play around with if you enjoy assets that are moving significantly more than the rest of the markets. Okay. I'm going to jump, actually, as promised, I'll look at the other metric leaderboards really quick. So on the whale transaction end, Audius, Convex Finance, and Numeraire are all seeing their highest day of whale transactions in the past 3 months today. On the key stakeholder side, for addresses that are specifically holding that tier of about $100,000 to $1 million of that particular asset, it appears that Optimism is the highest coin on the accumulation scale right now. Social dominance, it's mostly a lot of very small tokens, which means there could be potentially a bit of greed going on. It's hard to say. But Joe, Gitcoin, Numeraire once again, Zell, and Golem are a few assets out there that have particularly high levels of discussion when you're looking at their portions of the overall totality of crypto discussions. They have a larger slice of the pie than usual compared to the low discussion rates that they normally have. And then on the exchange flow end, UMA's exchange flow, I want to look at this really quick. UMA had a huge pump this week. They're not big enough to show up on the screener that I showed at the beginning of the call. They're just outside the top 100 at rank 127 right now. But take a look at what started here on January 18th. They went from here, if I plot this on just a 7-day moving average here, their 7-day moving average in terms of transaction volume ranged between, it looks like 50 to 80K. And then all of a sudden it exploded 1.7, or this is just averages, that is 978,000. It got over 1 million at one point on average. It's dropping a little bit, but it's pretty obvious just looking at these red spikes here that transaction volume has just had a sudden shift over the past week. And it, of course, had to do with price. And now a bunch of FOMOers are contributing to the higher level of transaction volume and sustaining it. Meanwhile, the daily active addresses have exploded as well. It went from, it looks like, maybe 90 to 100 active addresses per day. And then all of a sudden we get 1,575 a week ago today. And it has gradually come down, but still significantly higher than where it was resting before. And circulation, of course, is also massive compared to usual. And I wanted to look at exchange inflow as promised. There we go. So supply and exchanges, I'm not sure why it's showing missing data, because it's said, try updating here really quick, give it a hard refresh. It said that it was having some big supply and exchange shifts. I wonder if Sandbase is just lagging a bit, which would be a bummer. Yeah, I'm not sure why, but you can clearly see that its supply on exchanges was at 6.1% and then rocketed up to 7.6% in just a couple days there. So UMA is certainly a coin to watch, and I'm sure this data will refresh very shortly today. So keep tabs on it. The other one would be Numeraire. I think those are the two big coins of interest right now. And let's see how it goes. I'm curious to revisit next week and find out how those two particular projects shook out after what appears to be some very, very high levels of network activity that are standing out compared to the rest of the markets right now. All right, now we're going to go over to Bitcoin's metrics. And we're going to go down the list of some of its top indicators to kind of get a feel for what's next as we head into the weekend. How healthy is the network actually, now that we've seen, that big rise up from October all the way until early January, the disappointing drop after the ETF approvals, and now, at least in the past 24 hours, it's up almost 5%, which is pretty significant. So transaction volume, we do see that the price had its big drop. It's been rising significantly in the past 24 hours. Transaction volume, it appears to just be up and down right now. I'm not seeing anything special about this other than pretty, choppy based on the hour of the day compared to a little more smoothness that was going on here in late December and early January. But this probably won't give us enough information to gather anything special. Let's go zoom out a little and look at daily active addresses. Now, just as the activity matrix showed us, we did have a huge spike yesterday, one of its largest days in the past 3 months, the biggest day of 2024 in terms of unique addresses interacting on the network, with 1.1 million different addresses. So that is huge. And what it appears to be is that this was an accumulation spike right here that may have included a lot of key stakeholders, and we'll investigate that in a moment. But I like this sign of a huge daily active address spike followed by a price boost over the next 24 hours. That's generally a good justifier that it could be a sign of things to come. Circulation, pretty neutral right now. It obviously, we've talked about how the amount of unique tokens interacting on Bitcoin's network has picked up significantly. We had this long stretch of red bearishness on the divergence end for NVT, and it's gone from bearish to semi-bearish to neutral, and now it's semi-bullish, which is great to see. So if this keeps up, we've seen previously what happens when we really get into the green zones here, even going back to 2017 when Bitcoin's price started to really skyrocket. Generally, good things happen when you see that the NVT divergence really goes into the bullish phase like it is now. But it's tough to say whether this is going to last too, because looking at the circulation, it was probably a little higher as we got into the final week before the ETF approvals. But now that they've happened, there's a very slight hint that it's dipping back down. So I wouldn't be shocked if January may slip into more of a neutral divergence instead of semi-bullish. On the MVRV side, so this is an important one, 30-day trading returns just about even right now at -2%. So from an objective perspective, there's a very slight suggestion that we're still undervalued on the shorter term end, while the longer term end, those addresses that have been active in the past 365 days, they're still up a pretty large plus 22% right now. That would ideally go down a bit more, because if we really get toward like neutral, while the short term is in a negative range here, like we saw in mid-August, we saw how much of a bottom that turned out to be. This would have been an amazing time to buy in while long-term trader returns were so low. So now they're still pretty high. They're certainly not as high as we saw back in December when that bull cycle was in full effect. This would have been a great top signal if you were watching the short and long-term MVRV back in early December, because we had short-term 30-day MVRV was up above 15%, and the long-term was up at 51%. So generally, anything above 15 on the 30-day scale is considered concerning and kind of a bearish signal, and anything below -15% is a huge bullish signal. And right now, we're kind of in neutral. So I would ideally like to see the long-term come down a little more, but there certainly is an argument that Bitcoin is in a healthy enough range where it can go back on a rebound run to 45K, depending on sentiment and some of these other metrics we look at. Funding rate. Zoom in really quick. So we saw a few signs of some shorting going on. Right there, Deribit had a big dip in its funding rate, indicating some people were shorting, but they've kind of neutralized out for now. Binance has been, like I said, they've been in this paralysis state where they don't want to make any wrong moves. And it's been that way for about 3 weeks now, even going into the ETF approvals before they happened. Several other assets were actually showing that shorting was happening. I want to take a look at one. I'm going to come back to this thread as well in just a moment. These were some of our posts from the past week. Back on Tuesday, we posted about Bitcoin Cash and Loopring, which were both seeing some big short signals, and they both have rebounded pretty significantly. Not to the point where they were head and shoulders above the rest of the markets, but they've done rather well. And these were just two of the many examples that were happening. And I wanted to highlight the fact that we saw these sudden big short funding rates going on for both. This is what you want to look for, right? This is just like weighted sentiment shows how negative people are talking about assets. Funding rates are actually showing if they're putting their money where their mouth is in terms of their positivity or negativity toward an asset at any given time. And clearly, people were betting against altcoins after a couple weeks of unimpressive market returns following the ETF approvals. So, yeah, we saw quite a bit of market FUD starting to creep in. And now that there's this mild bounce going on in the markets today, the question is, are people going to believe it? Or do they think this is what's known as a dead cat bounce, where it's just a little bit of a encouraging sign to bait people back in, and people feel that they're too smart to fall for it, right? And they sell off right away just on a minor bounce with the fear that we drop right back to 38K Bitcoin and lower. But for now, I would watch for various assets that are still getting shorted, and there are a lot out there still. And as mentioned, I'm also going to show the other post here that I highlighted. This was back on Wednesday. This was when Bitcoin initially rebounded back above 40K, and there was kind of a split opinion. This is measuring the bullish versus bearish mentions, basically keywords. So, for example, Telegram's blue bars here are showing words like buy or buying or bought or bottom or bottomed or bullish. And they were actually lower than the combined words in red that highlight sell, selling, sold, top, topped, or bearish. So we've combined 6 words that are very synonymous with people being kind of bullish and expecting prices to go up, and 6 that reflect that they're expecting prices to go down. And Telegram was showing they were more bearish than bullish, and X/Twitter was also showing that same trend. Meanwhile, Reddit, which is often regarded as maybe a little bit smarter of a trader on average, I'm not going to make that argument, but you can assess your own opinions. Reddit was actually the only one of these 4 that was showing bullishness, where the red spikes here, right when there was that dip, really prominently stood out over the yellow spikes that were indicating bearishness. So Reddit was bullish, 4chan was neutral, and then X and Telegram were bearish. Once you kind of see some uniformity, like all 4 of these are showing lots of bullishness right now, or all 4 of these are showing lots of bearishness, that's where you can really take advantage of being a counter trader and doing the opposite of what the crowd believes unanimously. But it's been kind of split, and I expect that it's going to stay that way, even with this rebound that we're seeing and Bitcoin being back up almost 5% today. It's just going to cause more confusion, and that actually is where crypto kind of thrives. I wouldn't suggest it's going to cause markets to bump, but when nobody knows what to do and everyone's kind of on their own island in terms of their opinions, that's where crypto can really benefit. And I think that's what's kind of going on right now. All right, back on Bitcoin for a few more metrics here. Whale transaction count. We haven't seen a ton of $100,000 plus transactions, but it does look a little better on the $1 million plus end. So the really high end whales, they have been making some moves. And actually, this bar yesterday on the 25th was the highest we saw since January 12th, which was the initial reactions to the ETF approvals still. So there is some argument here that whales are buying up, and we're going to take a look at that now. Let me open my separate template here. Take off Tether and USDC, or only leave those 2, I should say. Let's make sure to refresh. There we go. So this is my concern. The wallets that hold anywhere between 10 to 10,000 Bitcoin, they've actually been dropping pretty significantly since going back to December 6th or so. We're now, I guess, I'm counting about 7 weeks later, and we're actually down to our lowest point with those wallets in over a year. Go back to 2021, back even further. So in September of 2018, they were holding about 66.25%. We're at 66.18%. So it's actually surpassed what is now a 6-year high. And this is one of the lowest points we've seen in about a decade for the supply held by these large whales. And you can see, especially starting right after the all-time high happened in November 2021, it's been a free fall in terms of the supply held by those key addresses that hold anywhere between 10 to 10,000 BTC. Definitely a concern there. It's not quite as bad when you look at the absolute amount of coins. So I can merge 10 to 10K in terms of the overall number. And now you see this yellow line here that does look a little better and kind of shows, the mini accumulation that happened beginning in June of last year and helped propel Bitcoin to have this rally. It actually got to its highest point in terms of just overall coins instead of looking at the ratio of the supply. This was its highest point since October of 2022. But even that line has really started to plummet. If we look at just the past 7 weeks, that those addresses that hold 10 to 10K BTC, they've dropped a total of 111,150 BTC or so during that time, or a total of about 0.85% of their holdings in totality, which is pretty large. I mean, you talk about 111,000 BTC. If you just calculate that times, we'll just call Bitcoin at about $41,300 right now. In terms of dollars, you're talking about $4.58 billion that they've shed since basically in the last 7 weeks or so. So I don't love to see that, and I don't think you should either. It doesn't mean markets can't continue to climb, but they'll have a hard time doing so when those large capital addresses aren't there to keep prices propped up, inject more when needed. So a lot more volume is going to be coming from smaller addresses out there for the time being. If we're going to, rebound back to 45K, it's going to be more due to the collective efforts of those smaller wallets out there rather than a few huge key players that are accumulating like crazy right now. We know about MicroStrategy because they're so public with their holdings and a few other examples out there, but most of these whales are anonymous and they like it that way. And we, according to the data, have a little bit less of their help than we had 7 weeks ago, and certainly less help than we had from them going back to October, November of last year when they were holding way more. Like if we look at November 29th, which was about 3 weeks after the true all-time high happened, these addresses are holding 625,140 Bitcoin less, or 4.6% less than back then. So what we're talking about a little over 2 years later, they're not quite moving in the right direction. So on top of that, what I like to do is look at the Tether and USD coin sharks and whales, and they aren't looking much better right now. Since June, Tether was holding about 40.2% of the supply in terms of the $100,000 to $10 million wallets out there. And now they're down to 34.2. So that's a solid 6% drop in terms of the supply held by these key stakeholders. USD coin, they peaked here on August 5th with just about 40% of the supply held, and now they're down to 35.2%. So the top two stable coins going down, combined with Bitcoin going down in terms of the holdings from those really large capital wallets, but not too large where they're exchange wallets, they're kind of moving in the wrong direction. And we've back tested these groupings of wallets pretty significantly to ensure that we know that they're the stakeholders that markets really rely on to have long-term cycles. And they're unfortunately moving in the wrong direction still. So long-term, I'm a little skeptical. We can see news pop up on a dime that changes everything. But, you would think with these ETFs, you know, if whales and sharks are really that excited, the question is, why aren't they accumulating the way the small holders are, who thought that this was the best news of all time when all these, positive announcements of the SEC approving the 11 spot Bitcoin ETFs were coming out. So for now, we wait. A few other things I want to cover. Social dominance of Bitcoin. Let's zoom in a little. Once again, just go to the last 3 months. Yeah, and it looks like we're pretty neutral. Bitcoin, of course, was getting some of its largest proportion of discussion compared to the rest of crypto as the ETF news was breaking. And it's now pretty much back to right at neutral. So not any signs of major greed toward altcoins, but not a huge amount of fear like we were seeing earlier in the week, which is usually implied when a lot of discussions are specifically related only to Bitcoin, the relatively less risky option compared to, those high speculative meme coins and other assets out there that are typically more volatile. All right, so that's a quick recap on Bitcoin and overall markets. We're at about a little over the 40-minute mark now into the call, so this would be a good time to take a few questions and any asset requests out there. We can go over what's pressing on your minds. If you have anything you can share with me, Balraj.
Okay, I think we have one asset request that's suitable, which is NYM, N-Y-M.
Interesting. Okay, let's take a look at
Which
NYM.
should be in ERC20 and should have some data behind it. Some history.
Yes, it is. Yeah, so this is the 306th largest asset in terms of market cap, with 122.7 million in total. Its price is 19.3 cents. It's down about 1% over the past day. And if we look at its trend in the last 3 months, it's pretty clear that there was this huge peak on January 16th, 10 days ago. And since that time, we've seen prices drop about 25%. So its market cap is down a quarter just in about 10 days, which is a bummer, but clearly it's kind of just gone back to where it was before that, because on January 10th, it was at 18.2 cents. Now it's at 19.2 cents. So from what I'm seeing, there is very little transaction volume going on with this asset. This is typical for assets outside the top 100 or so, but it appears to have a lot of big transaction volume spikes that often are associated with price direction shifts. They're not exact, like right at the top or right at the bottom, but this huge transaction volume spike here, where we had, looks like 9.06 million coins in terms of volume in just 1 hour. That was the highest spike we've seen. That's pretty similar to this one, but either way, it was one of the largest spikes we've seen in over a year. And if we look at its utility in terms of daily active addresses, yeah, it's been pretty low. It's kind of fallen back into its normal pattern here after it had the huge daily active address spike on January 12th, which was right where a top was, and January 15th, which was right where a top was. And we even had that big circulation spike the next day. So from what I'm gathering about this particular asset, it definitely seems to have a lot of utility spikes when it has a significant uptick in market value. And when it does have those spikes, it almost always correlates with some sort of top, even going back to, November of 2023. And yeah, both of these were back in November. So I think from what I'm seeing, if you see the prices rise, you don't want to see a sudden spike in network activity. And that's typical for a lot of small assets. Organic gradual growth in utility is a lot more important than just a sudden spike, because the sudden spikes very often are a sign of a big profit take from a bunch of traders, or even just one or two huge traders. And that's usually a sign that prices are going to head back down shortly after that. On the MVRV side, 30-day returns show NYM is actually the average trader is down 11% if they've been active in the past 30 days. That's a very good sign, actually. It's actually the lowest it's been in the past 3 months or so. And on the long-term side, it's pretty much neutral at plus 3.4%. So MVRV wise, it looks like there's an opportunity. We looked at this model at the beginning of the call, and if NYM was included on this model, it would probably be in the green territory here, based on the fact that its 30-day returns are so low at the moment after this big retrace. This kind of implies that a lot of people were buying toward the top and FOMOing in, and then got punished for it, and that's why the returns are so negative now. In terms of whale transactions, yeah, we see one thing standing out here, and that's the huge whale transaction spike of $1 million or more. There were only 2 of them, but they were the only 2 that's even happened in the past 3 months. So it's pretty clear that 2 big whales, maybe it was even the same whale, that suddenly decided, I'm going to get out of NYM while the iron is hot here. And right after that, prices tanked, and that's pretty normal with smaller assets. If you see a few big whales deciding to make $1 million or more valued transaction after prices have pumped 20, 30, 40%, it's pretty likely we're going to see a retrace shortly after. And even these other spikes, I mean, this one happened at a top, this one happened at a top. This one the prices were neutral, so there wasn't any top opportunity. And then this one, I would argue, was actually an accumulation spike, because it was at the base of the growth that happened over the next 5 days. Now, looking at some of the shark and whale tiers for NYM, the price is at 19 cents. So I'd say that the shark tier is going to start about here. Whale tier will be there. We'll just look at these 2 tiers by themselves, because it doesn't look like there's too many of them for NYM. So there's 45 addresses that hold between 100K to 1 million NYM, and then 9 addresses that hold 1 million to 10 million NYM. And then if we look at it in terms of supply held, and I'm going to add on the price really quick, I'm already seeing a very good looking yellow line there that implies that there could be an argument for some future growth here. I like the look of that. Here we go. Let's change that to a bar. Yeah, so it appears weird that it says 0% over here. I presume that that's incorrect, so just ignore the 0%. And I will say that these lines going up is a good sign. Since January 16th, over the past 10 days, the 1 million to 10 million tier is clearly rising, and that matters a little more than the lower 100K to 1 million tier. So I'm not seeing any signs that sharks and whales are giving up after this 25% correction on NYM. I'm just curious if this is just like a super centralized coin, and like all of the supply is being held by the very top. Yeah, I really have to presume that that's not correct, because it's saying just 100% is being held by 1 billion or more coin wallets. And, it could be a rounding thing. Maybe there's just almost infinite amounts of NYM, and almost all of it's in billion coin or more wallets, but that sounds unlikely. And more than likely, I would just ignore the percentages showing up and look at the line directions, the trajectories of them. And I think this yellow line is probably the one where you have the most key stakeholders. These are essentially millionaires in terms of dollars held, and they've been moving up pretty significantly, going back to right after Christmas happened. So I like the look of that with NYM. I'm just checking to see if there's anything else. Mean dollar invested
And
age
Brian,
also looks.
just a
Yeah.
short side note, I just checked Etherscan for the token, and it's clear how this gets messed up. There is like the gravity bridge holds like an unknown number of tokens.
Aha.
So that messes up the percentages, but the rest should be right. I will put that link in chat and people can check it out themselves.
Sure. Yeah. Thanks for clarifying that, Balresh. So sometimes when you have an unknown, so if the project isn't specifying how much is being held in a bridge or, um, staking address of some type, that can really mess up with the percentages. But I can still ensure that the $1 million or more tier that we were looking at, the trajectory of it is going to be accurate. We've never had issues with that. So the analysis I just did, it should still be correct and indicative of accumulation going on with a key tier that we want to be accumulating right now if you're bullish. I also want to mention mean dollar invested age. So I'll actually go to Bitcoin because I forgot to mention the mean invested age for BTC. But while we're here, it appears that NYM has significantly seen its dormant coins moving over the past 5 or so months now, it seems. The average age of investments back on August 29th was 312 days or so. And now we're sitting here at 226 days. So this is a very good sign. And if you saw this back when NYM was sitting at just 11.5 cents or so, and you see all of this dormant activity showing that investments are getting younger and younger in the average wallet, that would be a great sign that there's something brewing here and we might be in for a future rise. And that's exactly what happened. So as of now, it's still kind of going down. The latest big drop just happened on January 16th or so. It's climbing just slightly now, but we're still significantly lower than we were 5 months ago. And that's exactly what you want to see in an altcoin. Lots of mean dollar invested age decreasing going on, which would indicate that old stagnant coins are moving out and coming back into circulation for the main crowd to have access to those coins and start to up the utility of the network over time. Supply and exchanges is also interesting. The number, this has to be also once again related to the bridge wallet that Balresh mentioned, because it's showing 89,000% on supply and exchanges, and now it's at 0. But either way, I would still be confident that the direction is accurate and moving down is a good thing. But I would be careful about this because it's been flat since late October. So we'll just call that maybe data that needs to be clarified once NYM can clarify themselves what the unknown coin amounts are in those top wallets. Social dominance. So this is actually very important. It doesn't look like there's much discussion at all related to NYM, despite what was going on with this pump. We saw mild signs of conversations, but very little. And then even this retrace hasn't really given much attention to it. So it's pretty under the radar right now in terms of crowd attention. Not many people have watched NYM's crazy volatility right now. And that generally can be a good thing, because if we do see a pump, there won't be much FOMO to stop the trend. And it can just continue to go on a higher and higher pump until the mainstream finally jumps in and says, ooh, I want some NYM. I always knew it was the best project, blah, 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 So good sign that it's kind of staying low and not creating much attention. Yeah, and that's NYM here. As promised, let me go to Bitcoin's mean dollar invested age, and then maybe we'll look at one more asset really quick, or if there are any questions, we can address those. So Bitcoin's mean dollar invested age has also looked really solid. I love to see this. On October 21st, the average day or average age of investments was about 642 days. Now it's down to 613, 614 or so. Very good sign to see that coins even now are still moving down or moving out of stagnant wallets, I should say, and causing this curve to go down. For those who aren't aware of mean dollar invested age, if we go back to, let's just say 2017, most bull runs happen when the mean dollar invested age is dipping significantly, just like we saw in October of 2020. This was a few months after, COVID was really grabbing hold of the world's consciousness. You can even go back to 2017 when we were having that huge bull run, and a lot of, including myself, tons of people were first getting into crypto and learning about it. We went on a huge run here. So generally speaking, when the mean dollar invested age line is going down, great things happen, and it kind of is a justifier for a bull run. If it's moving up, that means that the network is getting more and more stagnant, and large wallets are just kind of hoarding and hodling their coins. All right, I saw two more options. I'm just going to pick one of them. I think Render is the more popular choice there. So let's take a look at Render, Balrush. Thanks for those. So Render's transaction volume right now. One moment. Oh, thanks for the clarification, Balrush. He was just mentioning the NXT bridge wallet. So transaction volume for Render, it appears it's not doing anything too special right now. Just to give you background on where Render stands right now, it's up to the 47th ranked asset. It has been one of the best performers over the past 6 to 8 months or so, after it really started to, I should actually just say, well, that's kind of weird. We're just really zoomed out. Let me go to like the last year instead. Yeah, so it really started in September. We're looking at about 4 months where it's been one of the best performing altcoins out there. It was at $1.32 at the beginning of September, and now it's sitting at $3.99. Even went above it went above $5 at one point. So clearly Render's been one to watch for quite a while now. It's up another 7.5% today, 47th ranked market cap asset with a market cap overall of $1.5 billion. Transaction volume hasn't done anything special. It's kind of staying dormant for the time being. In terms of daily active addresses and circulation, same story. It looks like most of the utility was happening on the way up. I am a little concerned about an asset where, just over the past 2 months, its price has gone that direction, but its trend in daily active address has gone down in that direction. So utility probably still needs to grow more organically, rather than just reactive to every time there's a big spike. You can see this one big spike here on December 14th was a big sign of a correction, at least for a few days, and it's still managed to reach a new all-time high a few days later on Christmas, it looks like. But on the subject of utility, it doesn't look like it's quite where it should be for a thriving asset right now. If we take a look at the 30-day, oh wow, yes, the long-term MVRV is even off the axis. I'm going to remove the axis limitations really quick so we can actually see what's going on with the longer-term trend. Okay, so 30-day wise, the MVRV is sitting at a negative right now, at -9%, which is great to see. However, the 365-day on the last full day was showing plus 135%. So this asset only started getting MVRV data back in July, interestingly, but the long-term returns are through the roof right now, even though it's kind of gradually declined over time. I'd be concerned about that. I think we do need to see the crowd have at least a little pain at some point for render. Otherwise, you know, coins don't just continue to go up even when the average trader is double their money. That simply doesn't happen. So eventually there is some point where there's a correction that brings it back to the zero-sum game that it is. So I'd be a little weary of the long-term returns right now. But on the short-term trend, there could still be an argument that we see a rebound through the weekend and maybe into next week, because the average returns are at negative 9% right now. Whale transactions, yeah, it's kind of doing the same thing as daily active addresses in circulation. They've really dropped down fast after all of the profit taking that was going on in December. That isn't necessarily a good or bad thing. We need some more context, particularly with these two tiers. So the amount of wallets holding 100K to a million render has been moving up since mid-November. It's still at 172, even though it's corrected from 189. So there's 17 less addresses over the past 3 weeks holding 100,000 to a million. And then the 1 million to 10 million is kind of staying flat for now. But let's look at the actual percent held in terms of these two tiers. Okay, so the 1 million or 1 million to 10 million, I should say, they hold about 35% of the supply, but they did drop pretty significantly during that big rally. Let me add prices on just so you can see context. Here we go. So yeah, once prices really took off, you can see that the 1 million to 10 million were dropping while the 100K to 1 million tier were really accumulating during this time. So they've kind of washed each other out. I would still be concerned by the fact that the yellow line has fallen as much as it has. That being said, there isn't any serious drop in these two tiers that would signal we're, in for some immediate pain. Like I said, I just think the long-term trading returns of the average traders are so high right now that it's hard to envision that render can continue this scorching pace going into February and beyond. But I do know there are a lot of positive arguments about the asset in general. I want to make sure I have my facts right on render's use case. Provider of decentralized GPU-based rendering solution. It's an ERC token, ERC20 token, which serves as the utility token used to pay for animation, motion graphics, and VFX rendering on the render network. So I've heard, I'm no expert in animation, motion graphics, etc., but I've heard a lot of arguments that it is really a positive asset for people that are in this industry. And can really change technology for the better. So unlike a lot of assets that we cover, render has some serious utility in terms of its contributions to technological advancements. So I do want to make that mention. I also want to mention that its development activity doesn't show on our platform right now, but I want to get with our developers and see if we can potentially change that in the near future, because I think it's important with one of the leading assets over the past 6 to 8 months that we have some idea of how active their team actually is at any given moment. But yeah, I think with all that said, we can wrap up now. I think overall the crowd is continuing to be mixed. We saw a slight amount of bearishness and shorting going on over the past week for a lot of altcoins, while Bitcoin, it's kind of just people sitting on their hands for the time being, but watch, graphs like this, which I think are extremely important because they're going to reflect, how many true mentions there are of buying versus selling at any given moment. And, you can clearly see here, for example, yeah, we'll just do it that way. So this spike here, right, as prices were taking off, it was showing there was some doubt going on and people did not seem sold on Bitcoin being able to rebound, or crypto in general. And of course it has. So watch closely, even in terms of separate platforms. If you believe that smarter analysis happens on Reddit compared to Twitter and Telegram, watch as a correlative indicator for Reddit and kind of a counter indicator for these other two. And we'll give you several updates going into today and next week to let you know if there's anything that changes here or on the funding rate side when people get too greedy or too fearful. But all of that said, I want to thank Balresh for the later stream today. And thank you all for coming at a later time than usual. Sorry, Balance could not join us today, but I'm sure he will be back next week. And on behalf of the entire Santiment team, I want to wish you a very happy and healthy weekend. And we'll talk to you soon. Take care, guys.